What's your response to that question, Shamik?
Actually, I think there are lots of factors that are determining London's relative weakness at the moment. Brexit is a key one, obviously, but actually the property market, I think, has been overextended in London for quite some time for lots of other reasons. Also, we've seen, a reduction in demand from, Russia, China, the Middle East, etc., which I think has affected the prime sector quite significantly. On Brexit, of course, next week is the crucial week. We get the 27th of February vote. I'm interested in what the market's sort of pricing in at the moment. It seems to me that of the three possible outcomes, delay, deal or no deal, the market seems to be putting a lot of emphasis on delay, with some possibility, a reasonable possibility of the PM's deal going through. And I think that's right. I'm just slightly nervous that we're maybe slightly underpricing the possibility of no deal.
Yeah, and that sort of seems to come through from a number of guests that come in. And if you look at vol, certainly vol in the near term is underpricing that. Can I ask you about Europe? The other main story is perhaps another 90 days of angst between Europe and the United States of America. I'm curious to get your take, because if we go for tariffs, a new slap of tariffs from the US onto Europe, do you think that that's what would tip our bond markets in Europe into negative? And I'm thinking specifically on the bunds. We're so close to negative territory. Is this a defining moment for the ECB and rates in Europe if we get tariffs?
It could be, and clearly, I guess one of the messages the US administration is taking from the current tariff war is that, quotes, tariffs work, or at least they bring the issues to the table. So yes, it's possible that the imposition of tariffs could be the thing that pushes the Eurozone towards negative bond yields. Frankly, though, I think there are fundamental issues that are actually a bit more important. I think the issue with the Eurozone remains the fact that it's frankly over-dependent on global trade conditions, that it's not generating enough domestic demand of its own to leave it resilient, if you like, to shocks like changes in tariffs. So I think there are two questions there. One is what the reaction to the tariffs will be, but also what the implications for domestic policy, both fiscal and monetary, is likely to be.
As you mentioned, global